Alright, ladies and gentlemen, welcome to Simple Markets. My name is JB, and today I have a pretty important video for you guys. I'm going to be going over completely step A to Z of what I would do if I completely restarted my trading journey in 2024. Now, I built this entire video off of my personal journey in the plateau that every trader nowadays is reaching, especially when it comes to online learning. Many traders think that the markets are simply learning smart money concepts nowadays and all those flashy new concepts on how to read a chart. But what they don't realize is after learning those concepts, they're going to hit a massive plateau, and it's going to come from the many different things we're about to talk about in this video. Alright, so without further ado, let's get going here on the slideshow. Alright, so before you, we have a little roadmap that I created. You can obviously see we are at the start at the moment. We're going to go through 3 main key points and then a bunch of sub points on each one, and eventually get you to the finish line here. And the title we have at the top is the fastest track from a beginner trader to a consistently profitable trader, and consistently is the key word there. It's very, very common that traders think they made it to consistency, think they made a profitable trading plan, and it only takes a little bit of drawdown and a little bit of psychological failure to realize they are in fact not at the end goal. If I started from day one, these are by far the most important topics that would push you over that plateau that many traders are reaching nowadays. So the first stop we have here is simplicity. Now, this is extremely important. Nowadays on YouTube, everyone has become a guru. Anyone can start a course and feel like they're qualified. It's also very common for traders to feel they are above where they actually are in their journey. Until you're consistently profitable for 6 months to a year, many people believe they can go into teaching, when in fact they get to that point and they realize more issues are arising in their trading. They're not as good of a trader as they believed. What they end up doing is this lack in confidence, or this lack in a profitable system, trickles down to their many students that they now have through their social media following that they've accumulated while entering the mentorship space, and it just ends up corrupting an entire market of new beginner traders who don't quite know their way around yet and don't know how to identify what's real and what's fake in this industry. Now, if you don't believe that simplicity is key, you don't have to take it from me. I'm going to insert a little clip here of Larry Williams. He's a 62-year market veteran. He holds the world record in the Robbins Cup for 11,200% gain in 1 year. So you can listen to what he has to say here about simplicity.
It's so confusing. You have all these indicators in your chart, and the success of this business is about simplicity, not making it complex. So the more indicators you have, the more difficult it is to make a decision.
Now, that is a great clip from Larry Williams. I'm a huge fan of him personally, and I do put that clip in there as well because I want some of you newer students to kind of realize that these are the people we should be looking after and modeling our trading after. Even myself, I'm a huge fan of Larry Williams. I learn a lot from him, and I think that learning from real established traders in this industry, he's been trading for longer than my lifetime, and I think these are the people that we should have on that pedestal. Now, there are some big name traders in the industry. I'm not going to name any specifically. I have gone through many courses myself in this industry to see what people have to offer. And the unfortunate reality is many of these courses are failing traders simply due to the over complexity that they bring to the table. Now, on your screen here is just a few different concepts that this industry has now pushed into the smart money space. Despite all of these concepts having their own unique ways they can work in the markets are a probabilistic setting at the end of the day. So I'm not the type of mentor who's going to sit here and tell you that Wyckoff doesn't work, or order blocks don't work, or IFVGs, this new concept, does not work. These things can all work, but the issue is the way that they're presented by many mentors in the industry is you need to use all of them. You need to overcomplicate this analysis. All of these things need to be in your trading plan, and it leads to the ability to not be able to execute consistently. The more complicated it is, the more variables that are going to keep you out of a trade, and the more variables that are going to even lead you to believe that you missed trades that realistically shouldn't have been taken in the first place. At the end of the day, the markets are completely probability based, and the more simple that you can create your trading edge, the easier it'll be to consistently execute that long term and maintain that edge over the market. Now, the second step here, and the most important step in my personal opinion, is an actual written trading plan. Now, I've taught many students, not only in the mentorship and community we have, but even just I get DMs from a lot of people and I enjoy helping traders. It's just what I do. I enjoy these markets a lot. So when I get questions, one of the first things I ask them is your trading plan written down and defined with rules? And it's very, very common nowadays that some people didn't even know this was a step that you need. But this is something mandatory in the markets if you want to have consistent results long term. Now, below I have a few recommendations of what I would like to put into a trading plan. If you are a part of the Simple Markets team, you actually will be given our personal trading plan, which is another thing that I find a lot of communities nowadays are not doing. These mentors and gurus that may be able to teach you trading concepts of smart money, they personally don't have profitable trading plans, so they're afraid to show you their trading plan or even talk about it because they know at the end of the day it doesn't work. And I want you guys, if you're in a community at the moment, to keep that in mind and think about, does your mentor actually talk about their own trading plan and strategy? And if not, what are the reasons that may be? Now, market time and sessions, this is kind of the precursor to a trading plan. What markets are you going to trade? Personally, I trade the foreign exchange. The time of day for me does not matter. I do prefer to trade a little bit of higher time frames, and so therefore the sessions don't matter as well for me. Number 2 is going to be your market bias. How do you hop on the charts in a day and formulate your bias of where you want the charts to go? Now, for some people, you might use smart money concepts to do this. For other people, you might even have something as simple as a 50 EMA indicator on the chart. If we're above it, you're bullish. If we're below it, you're bearish. Now, this is an example of what Larry Williams used for many years. It's just one simple indicator to formulate his bias. As I mentioned before, simplicity is the key in this case. If you have too many variables to form your bias, you may hop on one day and miss a trade based on an incorrect bias and then go and blame yourself when the reality of it is it was the over complexities that you brought to the chart that day. And then an entry model checklist. Now, I think this is probably the most important part of a trading plan. My personal checklist is about 5 different points, but these are the things that you should see when you hop on a chart that allow you to enter the market. If all of these entry points are not met, you cannot enter the market. And as we talked about plenty times, please keep it simple. 5 points when using 6 concepts for each point is not 5 points anymore. This is another common thing I get when I have new students bring me a trading plan. It might have step 1 and will list 7 different concepts that they can see on a chart for a point of interest, for example. It can be a supply zone, a demand zone, an order block, a fair value gap, an IFVG. All of these different things just overcomplicate the process. Choose one point of interest, choose one thing that you want to see per step, and it'll help you form a consistent and simple entry model that you can ensure every day when you see that model, you have the confidence to execute when it's present. And last but definitely not least is your risk management. I always like to have this written and predefined before every trade in my trading plan. Now, this is how much percent you're going to risk per trade, how much RR you might want to target, your risk to reward per trade, even how you want to manage your trades. Are you going to break even on positions? Are you going to have a trailing stop loss? All of these things need to be predefined. And down the bottom there, you can just see an example of a trade image. I think this is also another important part to a trading plan. Post as many trades as you want in your trading plan to help build that confidence in it. It does not hurt. Some people are more visual learners, and it definitely can help to just have as many images as you want in your trading plan. Alright, now we're going to talk a little bit about a trading edge. Now, an edge is a mathematical advantage over the market, and this ensures long-term consistency. Alright, just a brief reminder for everybody to go check out our website in our description below. We have one of the most successful and proactive trading communities on YouTube, so feel free to check the link below if you're interested in joining. If you have not liked the video, please do so and subscribe to the channel, and without any further ado, let's get right back into the video. It's completely probabilistic based, so all the market moves with is probabilities. You're going to take losses, it is part of the game, but you have to set up that mathematical advantage to ensure that when you're taking losses, your winners are coming along to make up for them and gain you more profit. So the example we have below here is just using an equity simulator. Now we have the capital just set to 100K standard. Your win rate here is 75% in this example, and your risk to reward is 3 risk to reward. 100 iterations just means 100 trades, and then the singular line here was just to make the graph look nice and easy and nice and simple. We can see the one single black line that maps your data. Now, over the course of 100 trades, you can see this is not only extremely profitable, but there is many losses that were taken and little dips in the equity curve as well. For those of you that like to go for these ridiculous risk to rewards because you saw your favorite YouTube mentor using them, just know your equity curve is going to be extremely volatile compared to this. And on top of that, your win rate is going to drastically come down the higher risk to reward you target. And in a professional trading setting, this is a big no-go for many firms. Your number one goal should be capital retention, making sure that you're avoiding large-scale drawdowns and you're keeping your win rate high. So using these high risk to reward strategies that are very flashy for social media is not the reality of what a professional trading setting will accept. Overall, this slide was just meant to show you the idea of a trading edge in the equity curve over the markets, and how despite some of the losing trades or maybe a few losing trades in a row, overall in a long-term perspective of 100 trades, you will have an extremely profitable edge in strategy over the market. All right, now we've officially reached the third point on our roadmap here, and this is repetitions. Now, experience goes a long way in this industry. Now, repetitions, what I mean by this is just practice on a demo account and journaling your trades. And over a long period of time, not only are you going to build that pattern recognition of your entry model, but you're also going to really build that confidence in your trading plan when you see over a long-term period of time your data is profitable and you know what trades to look for and how your entry model should look. And this is very similar in backtesting as well. So backtest your trading plan and adjust it and master it. Now, a subsection here is your market expectations. This is a very big one nowadays. All of these 4 things I have written below are what formed your expectations as a trader, regardless of who you are, unless you have a personal mentor in the professional industry. Now, YouTube education and gurus, this is probably the worst one nowadays. A lot of these educators may claim to be making 100% a day. They may claim to be making these 30 risk to reward trades, or even some mentors out there claiming that there is a 100% win rate in the markets and that you can achieve a 100% perfect strategy. I hate to break it to you all, but that's just not the reality of trading. If you are falling for these things, you really need to take a step back and approach this industry with a much more serious point of view. Now, other social media content, TikTok specifically, this kind of just relates to a lot of the Rolexes and Lamborghinis and get-rich-quick schemes you're seeing on there. The modern prop firm industry as well, that logo to the left there, I'm sure some of you are familiar. Now, these modern fake prop firms where you're trading simulated capital, at the end of the day, they try to set up these challenges and evaluations so that traders are failing because this is how they make their money. These firms have an evaluation fee, and the majority of their money comes from the failure rate of those fees. Now, some of these firms, the one listed here specifically with that logo, their failure rates are over 99%. However, they do set a target for these evaluations of 10% a month, and if a failure rate is 99%, but they set targets as high as this with ridiculous expectations, some traders don't seem to put 2 and 2 together and realize that 10% a month is a bit of a ridiculous goal, especially for anyone who's new into trading. 10% on a professional level is seen as extremely aggressive risk management and an extremely risky approach. Now, personally, I feel I can say this and talk about this because I have passed plenty of these prop firm challenges for many different firms. However, I pass them by using aggressive risk management because I understand going into it that these challenges and evaluations are made for you to fail. And the very last one here is Discord trading communities. Now, I hate to say it, but some of these Discord communities are absolutely horrible when it comes to the truthfulness of these students in these communities. And that doesn't just go for free communities nowadays. There is some of the largest paid Discord communities out there that I personally have been in, and 90% of these communities are failing traders behind the scenes, but they like to share their winning trades and they like to get the attention from the rest of the server. If you feel the need to look better than you actually are, you cannot expect to learn and grow. So with all my babbling about market expectations out of the way, with data from a #1 trader out of a New York hedge fund, so this is about a 7-year track record. We're looking at 2017 to 2024. However, if you look at the right of your screen, you can see he returned about 111% over the course of these 5 to 6 trading years. His average risk to reward was 3 risk to reward. Now, the win rate here is about 56 to 61%. If you take the average of the two, you're looking at about a 58% win rate. So even with a 58% win rate and a 3 risk to reward, if we went back to that equity simulator we talked about in the slide before, you would see the data is pretty similar to that, and it's a fantastic edge over the market in the long term. Despite having losing months here, which is another thing I want to focus heavily on, a lot of mentors in the industry like to say they don't have losing months. I have personally had losing months. You can see the #1 trader in a New York hedge fund had 3 losing months in a row in the year 2018, but at the end of the day, you can see that he still managed to finish 2018 in profit. You can see many losing months in a row here, and I really hope this opens up the reality of this industry to you. You are not going to make profit every single month. The markets may simply not deliver based on your trading plan. My goal here is to open up the point of view, because I really wish when I started and I was buying all these mentorships and courses, finding the next best thing, I really wish I was just introduced to someone being a little bit more truthful and showing some reality and real data of what trading looks like from a top performing trader. Feel free to screenshot this data if you would like and really dive into it and break down the data for yourself. I think it's a good way to kind of gain a better understanding of trading in the industry as a whole, especially when you know that this is a professional trader. Take a deeper look into this if you want, and we're going to head over here to the next slide. Now, I hate to break it to you guys, but I did lie with the finish line that I mentioned in the first slide. The Journey Begins is the title of this slide, and it's properly named because at the end of the day, once you achieve profitability, your journey for scaling and your potential now as a trader is through the roof, and you're just beginning. I remember when I was on the edge of being profitable compared to the accounts that I trade on today, and the difference is something I would have never imagined. Trading is a skill like many others that once a person has officially learned it, their value in a marketplace is extremely high. And for any of you that study finance, you will know that the more value you bring to the marketplace as a whole, and the more value you bring to the economy, the more money potential that you have to make. Trading is one of the most scalable industries in the entire world. You're going to constantly be learning and growing, and I think at this point, finding a network and a community of traders that you can speak and grow with is very, very important. It is one of the main reasons why I started Simple Markets. Is a lot of my past students are actually even partners nowadays when it comes to scaling accounts, trading, looking for different opportunities as a trader. And bigger goals and ventures are constantly popping up. I've tackled prop firms, I've tackled personal capital. We have some of our traders actually looking for real jobs now in hedge funds and proprietary firms in the professional trading industry. The sky is the limit at the end of the day. And that last bullet point, self-improvement, I just think this one goes without saying. You should constantly be working on yourself, your health, your mindset. All of these things, as cliche as they may sound, they do have a massive effect on your performance and your success long term, not only as a trader, but in any business that you plan to pursue in the future as well. And I especially hope that this video helped you in the trading industry itself and really open your eyes and hopefully start you off on a good foot, which I unfortunately did not get to do. It took me many years to learn the concepts in this video, and unfortunately many mentors that failed me and did not teach me any of these things. It's the main reason I created this video and this slideshow for you guys, and I hope you found some value in it. And last but not least here, I just want to say thank you all for watching. Now, my Discord, I have linked there below. It is jblaisdell729, BLAISDELL 729. Feel free, anyone here, to, if you made it to the end of the video, reach out, DM me with any trading questions you have. If you want to send me your trading plans, I can look over them for you. I do have a genuine enjoyment for this industry, and I really do enjoy teaching. I've been mentoring for many years now. I'm more than open to helping any one of you who are watching this video, so please don't feel shy. Reach out to me in direct messages, add me as a friend if you would like, and then below we have our website linked there if you would like to join our community. And thank you all once again for watching. I appreciate your time, and I will see you guys in the next video.